What is up, everybody? This is S Trades, and today's day 15 of the bootcamp. And in this video, I'm gonna be going over break of structure and market structure shift. Right? I didn't want to kind of separate them into two videos because they're pretty not the same thing, but they're very similar. So I just kind of want to put them in one singular video. So without further ado, let's get straight into the video. I was gone for a while. I was gone for like 2 weeks. I was on vacation, and my school ended, so I just kind of taking time off of everything, and just taking some time to chill out because I didn't really have that. But I'm back and I'm gonna be posting content again on a daily basis. And so yeah, let's get straight into the video. So what is break of structure and market structure shift, right? So break of structure is whenever you have a certain trend, right? So in this case, in the left case scenario, right? Let's say you're on an uptrend, right? Every time you're making the higher highs and higher lows, and every single time you break past the high, you make a break of structure, right? So in this case, you make a higher high, higher low, and once you pass the break, once you pass the recent high, you get a break of structure, right? So boom, you pass that new high, then what happens, you make a new high, you retrace down, and then once that new high gets formed, and if candles again ends up closing above that high, we get another break of structure, right? And a market structure shift is pretty much a reversal, right? So think of a break of structure as continuation in the trend, right? Like a confirmation that you're continuing the trend, and market structure shift is pretty much a reversal, right? So in this case, we're making our higher highs and higher lows, and the moment we get a confirmation that we're now reversing is when we don't make higher highs and higher lows, right? The previous highest low gets broken and candles end up closing below that low that was supposed to get respected and continuing up higher. But instead, candles close below that low and we see follow through all the way down below, right? So the main thing you guys have to understand is displacement and candle closure, right? So that is the most distinct thing that you have to understand. The difference between, for example, a liquidity sweep and like a market structure shift, right? Is in this case, a market structure shift, what you're gonna have is candles end up closing below this low, not just like a one singular tiny candle. Like no, you see a lot of displacement. You see big candles, big fat candles closing below that level, and then you're seeing follow through, right? So once we have that, candles end up closing below that low, and now we have continuation, right? So now we have new break of structures to the downside now because we are now bearish, right? So we switch from being bullish to bearish. Now all of this lows that get broken is a break of structure. So now let's take a quick look at a bearish example, right? Pretty much just kind of what I said here, right? We're gonna start with our high high, higher low, higher high, higher low. So when we break our highest low, right? We push past it, right? We make a lower high. Lower low, sorry. That is when we have our break of structure, right? And then we have what we have a little retracement back to that area, right? And then again we push past that low, making again a break of structure up until we get a reversal, which again is our market structure shift. And again we have candles closing above that previous high, and we have follow through, right? So once we close above that high, now we're seeing follow through back up to the upside. Right now we're getting more break of structures to the upside, so now we're bullish instead of being bearish, right? So again, if you just want to think about it, right, if you're truly bearish, right, in this case you don't want to see price come up and take out those highs and have follow through, right? Instead you might see like a liquidity sweep, right? If price kind of just comes above this high, takes that level out with a wick, and then you start to see continuation down low. That's going to be just counted as a liquidity sweep. But in this case, a market structure shift is when you have confirmation and candles end up closing above it, and you have displacement, right? So candles end up kind of following through. Now this is a true reversal, right? So that's literally it. You have to pay attention mostly to the way the candles close, right? If a candles end up closing above, for example, in the bullish case scenario, if they're closing above highs, right, and then there's a lot of displacement, it's not just like one candle that end up closing above a high, but you see multiple bodies closing above that high, and you have a lot of displacement, meaning there's a lot of candles with a lot of speed and big size pause that end up kind of closing above that high, and that's how you see that break of structure and the follow through. Same thing with market structure shift, right? If you're just kind of higher highs and higher lows, right? For you to see an actual market structure shift, candles have to go super fast. Well, not, it doesn't have to be crazy fast, but it has to be a fast reaction back down to the downside, and candles and have to follow through with the displacement, right? You have a lot of candles, they're big and they're fast. Pause, but you guys understand, right? Now let's take a quick look at actual chart examples. So now taking a look at actual chart examples, right? So in this case, we have bearish, right, case. So we have price coming down lower, making lower lows and lower highs, right? And then once price ends up closing above our previous high, right? See, a lot of this is displacement, there's follow through. We even made a new week opening gap. And once price closes above this high and sees follow through, that's when you call that a market structure shift. So now we're reversing from this point on, right? And now we're going up higher, right? Now, how do we confirm that? Again, displacement and follow through on candles closing, right? So what do we have here? Price ends up coming down, right? So this new week opening on this market structure shift, right? We pull back to it and then we have our new swing high, right? So what happens then? You see how there's massive candles, right? That is what's called displacement. You see these big candles with a lot of speed, right? This one singular candle is already good enough confirmation, right? And then we have follow through, right? So now candles end up closing above this high, and now we have a break of structure, right? Now we already made that reversal point, right? We already made the market structure shift. So now once we passed our highs, now it's going to be called a break of structure now because we're continuing our quote unquote uptrend, right? So now this is again a good example of what it doesn't look like. So for example, yes, you have our new low that gets formed, a new high. You see one candle closing above it, but then we're kind of gonna dilly-dally in here, right? So we make a new high, right? Over here, what happens then? So price ends up coming up all the way over here. So you could have pre-fired it by thinking, okay, now this is a this is a break of structure. Let me just enter. But you guys see, there's a wick that end up getting left behind. So it's still not a break of structure. It's just a liquidity sweep, right? What do we have after that? Again, no displacement, no follow through, no candles closing above this level, right? So this high needs to get closed above with a lot of momentum for it to be counted as a break of structure, right? Yeah, you could kind of count this as a little, momentum candle, but again, it was just one candle and it was at lunchtime, so that wasn't really it for me, at least. So then what do we see is we have price coming down below, taking out all of these levels as a liquidity sweep. So this, again, if this was, for example, a market structure shift, right, you wouldn't see this big wick, right? Instead, you would see like a candle like this one, right? This white candle, you would see follow through and displacement to the downside. Now that would be considered as a market structure shift, but in this case, it was just a wick that got left behind. The body ended up closing back in the zone. So this is just a simple liquidity sweep, right? And then what do we see now? We have our new high that got formed, right? And now this is, again, this is what's called a displacement. You see how big of a candle that ended up closing above it? This is what's called displacement. Now we got this new break of structure. And again, following through, our new high got made. Again, candles following through, break of structure, right? So you guys got the gist. So taking a look at more examples, right? Right here, we're in a bearish flow, right? Bearish order flow happening. So what happens here? This new swing low gets broken with a big candle, right? So now there's displacement and there's speed. So now this is a break of structure. What do we have after that? Price ends up coming retracing back up to this fair value gap, and then our new swing low that gets made again gets broken with a big massive candle. So that's now again a break of structure. And then once, what do we have here, right? We have our new lower high that got made, right? So now the theory behind it, again, if we are truly bearish, right, there's no reason for us to close above this with a lot of displacement. Instead, we could maybe kind of take it and sweep it maybe and then kind of follow through, right? So again, if you are bearish in this case, right, yeah, you could come up, take this high, right, but then you want to see follow through to the downside, right? This is in a bearish case scenario, right? So clearly right here it is not. And what do we get here? We get a market structure shift, right? So price ends up closing above a previous lower high, right? That was supposed to get respected and pushed past this low instead, but we didn't. We ended up closing above it. So now we have a market structure shift. And again, for a better confirmation, with this new higher high that was previously made also got closed above. And then moving on, so now we're moving from a bearish order flow, right, from a bearish trend to now a bullish trend. Why? Because we got two market structure shifts, right? And now what do we have here? We retrace, right? We make a new swing high over here, right? And you can also count this one, right? So these new two swing highs, right? What happens? Price ends up closing above both of them, retracing back down to this discount 1 hour fair value gap, right? And then what happens? We make a new swing high, and then boom, we get massive wick, massive candles following through with a lot of displacement, and you get the just so on and so forth. Now time frames matter a lot, right? So I was on higher time frames, right? So those breakup structures and those market structure shifts was more towards the directional bias, right? That was more towards where price might go for the day, for the few days, right? So now let's say if you're on a lower time frame trying to look for an entry, that's a different case, right? So let's say over here, right, you think that price is bearish because of all this bearish a little bearish trend that we got going on, right? So in this case, in this scenario, right, we see that price ends up closing below this low, right, with a lot of momentum and a lot of work. So let's say you entered a short in this scenario thinking that Not only that, we're now bearish fully, right? Let's say you put your stop loss above this wick and then targeting whatever, right? What happens, right? We get stopped out. Now, you can't just blindly enter off of break of structures or market structure shifts, and you have to look at a bigger picture, right? So, although we're on a 5 minute, we got a lot, very good confirmation that we might be going down. Now, if you just zoom out, right, to the higher time frame, right, where we are over here, right? So this is where it happened, right? Yes, you do get your little market structure, you get your little break of structure, right? Price and them closing a little below it. But now, if you just zoom out, right, and look at price, where are we? We are clearly in a very heavy uptrend, right? We're making higher highs, higher lows, right, on a higher time frame. Even over here, just close by, right? What do we have here? After sweeping out all of this important liquidity, right, all this lows, we immediately started pushing up higher, right, making break of structures to the upside, right? So now this could just be simply counted as a liquidity sweep of this low, right? So boom, we ended up sweeping out this low, and then what do we have here? Immediately push up higher, right? We inverse this 1 hour fair value gap right over here, right? We inverse it. This would be counted as a market structure shift. We don't get it yet, right? So this is still not a confirmation. This could be a liquidity sweep for the bears, right? This could be a liquidity sweep for them to push down below, right? But we eventually get that confirmation over here, and price ends up pushing up higher, right? So this is literally just as we're speaking, this is price action now, right? So yes, on the 5 minute, this looks very, very bearish, right? But zoom out on the bigger picture, right? Zoom out, where's the actual trend? What are we in, bullish? Are we bearish, right? Do not fight the trend. Like, trend is always your friend. Everybody always says that, but it's a fact, right? You don't want to short against a very strong bullish bias, right? So in this case, yeah, you were wrong simply because you didn't look at a higher time frame. That's all it is, right? You just haven't looked at a higher time frame. You just got too focused on a lower time frame on a 5 minute, right? And then that you just zoom in too much, right? Just zoom out, see what the bigger picture is, just to see the actual narrative, right? Again, you could use these market structure shifts and breakup structures in two different ways. That could show you where price is going in terms of the bias for the day, or it could be used as an entry model just by simply whenever there's like a market structure. Let me just show you a quick example. Over here, let's say you were bearish, right? And your entry model is a break of structure, right? So right here, right, we swept all this liquidity, made our new low, came up, retraced up higher, and then boom, over here, we get that break of structure. So let's say your entry model is just, waiting until that candle closes below a certain low or high. So boom, candle ends up closing below this low, right? You enter a short targeting all the lows, right? And then boom, you get it. Good job, right? That could be used as an entry model, right? Just like I showed you, waiting until price ends up closing below or above a certain high or low. That could be used just like that, or it could be used like I just showed you earlier in terms of a higher time frame, seeing where price might be going, right? And if you guys recall, the past 3 videos that I made was just simply these entry models, right? We started off with IFEGs, right, inverse fair value gaps. Then we moved on to CISDs, and now the final one is break of structure and market structure shifts, right? So I made it in that specific order because that's how price happens in that same exact order, right? So first, what do you get, right? So even in this case, right, what do we have here? We have our inverse, right? We're here in this 5 minute inverse, right? Ends up happening, right? So this is a 5 minute IFEG. Then price ends up closing below this bearish CISD, right? So this right here will be the CISD over here, right? But price ends up closing all the way below over here, right? And then only then we get that break of structure all the way down here, right? So now you could just compare. It's just a matter of a risk to reward, right? Me personally, I like IFEGs because not only are they the earliest, right, but they're the ones that make sense to me the most, and they're the least kind of fakey out. Like break of structure sometimes could fake you out a little bit. A candle could close below or above a certain level, but it could still go in the opposite direction, right? So I don't really like that, and the risk to reward is usually very, very off, right? IFEGs, look at how and premium we all the way over here. Then we get that CSD entry, which is over here, right? Let me just move it over here so you can see it. So you guys can see it's like a staircase, right? First we get IFEG, then we get CISD, and then we get market structure shift and break of structure, right? Although break of structure is like that final step, which like kind of solidifies the trend, right? So once you get that market structure shift and break of structure, then you can be like, all right, like it's not that it's guaranteed, but it's a very high likely percentage that we're going to just continue that trend, right? With IFEGs, it's maybe too early sometimes, same with CISDs. So break of structure is just simply like that final piece, that final confirmation for the certain trade to go in either direction, right? So again, it's up to you. It's up to you guys to choose which entry model you want, right? I taught you guys the IFEGs, the CISDs, and now finally this break of structure, market structure shift, right? They're all useful. They're all helpful, right? what I would recommend, don't use every single model. Like don't use microstructure, don't use CISDs and IFGs all combined together, right? Because you're gonna get confused, you're gonna get messed up, your statistics aren't gonna be like really accurate, right? Instead, just focus on one. I personally like IFVGs, and very rarely, sometimes I would enter on a CISD only when there's no IFVGs, which is literally almost never, right? So if I see like a very clean play and there's for some reason there's no like a fair value gap in that certain leg for me to take, then I would take a CISD entry, right? So that's just kind of how I trade. I'm not telling you guys to choose IFVGs over break of structures. You guys know TGR, he just trades straight up break of structure and retest, and so that works for him. Although, like I said, I don't necessarily like the rest of the word with break of structures, right? Because we enter all the way down below over here. Yes, you get the most confirmation, right? That price will likely go down. But again, you could have missed out on all of this risk to reward again, right? So I don't want to get too greedy or anything like that, but that's just simply the fact, right? So that's about it, guys. Like I said, the main important things that you guys have to focus on with break of structure is the displacement, when the body's closed, and you have to wait until you see that move, right? Like until you see that speed and that displacement. That's what confirms the break of structure. You see how candles end up closing below it, right? With lots of these big body candles with barely any wicks, it confirms that break of structure, and then price ends up pushing all the way lower. So that's kind of how you indicate break of structure and not like a liquidity sweep, right? With liquidity sweep, you just get a little wick and nothing ends up in the closing. Maybe like a one little tiny body ends up closing above or below a certain level, but you don't really see any follow through. With break of structure, displacement and follow through, candle bodies end up closing with massive sizes, and it just follows through, right? So that's about it for this video. Again, this is day 15 of the bootcamp break of structure, market structure shift. If you guys are confused or didn't understand anything, please comment down below. If you guys like this video, put a thumbs up, and I will see you guys in the next video.